Hello traders, welcome to your Follow the Bots S&P 500 Daily Market Recap, sponsored by Zaner. Since 1980, Zaner has been helping futures, commodity, and forex traders trade smarter, faster, and easier.
Hello traders, Builderier here with Follow the Bots. Welcome to the Daily Market Recap. A detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Wednesday, August 28th, 2013. Last Thursday, the S&P 500 auctioned up through the developing trading range, trading above the prior three-day high. The rally, which we deemed to be short covering, continued on Friday, and at the open of Sunday's Globex session, S&P futures traded up at or near the prior support level, the breakdown transition point located up at 1670. Following the short covering rally, when the buying interest faded at Monday's high, S&P futures sold off into the close. During the overnight session, the selling pressure continued, and by Tuesday's open, the S&P had traded down below the prior four-day low and made a new low down at or near 1626. Using our market structure model to indicate the key support and resistance levels, going back to early July, a 5-day consolidation range developed as the S&P auctioned up off the June low. It was at this 5-day high at or near 1620 that the S&P transitioned out of consolidation and rallied back up to the prior multi-year high. We have been stating in our daily briefings and in our market commentary for some time that the 1620 price level is the key support level. After trading down to 1626 during yesterday's session, the S&P auctioned up above yesterday's close and traded at near-term resistance at or near 1636 in the overnight session. At today's open, the market pulled back to yesterday's low and made a modest lower low, auctioning down at or near 1624, 4 points above the key support level. Buying interest entered at the low, and the S&P rallied above the overnight high and auctioned up to 1639, shy of the current near-term resistance levels, designated up at 1644 and 1646. For a detailed look at today's market developments, we'll turn our attention to a 5-tick range chart. Along with our market structure analysis, we employ several digital filters to assist us in determining the price direction and the key turning points in the market. We also use a suite of order flow algorithms developed by Skido. The order flow algorithms provide insights as to how the computerized trading programs, which dominate 70% of the market volume, are executing orders. These insights are surfaced by what we refer to as order flow events. The events fall into two general categories. First, we look to see when the selling programs terminate or wane as the market pulls down at or near key support levels. Following an order flow event that indicates sell programs are waning, once we have determined that sell programs are waning, then we look to see if high-frequency buy programs are initiating trade. When the market auctions up to a known resistance level, we look to see if the buy programs that cause the market to rally to the high cease executing orders on the buy side. This event is called Buy Programs Waning. Once we have determined that the order flow events indicate that the computerized trading programs are no longer executing to the buy side, then we look for initiated or high-frequency sell surges to enter the order flow. As you can see during the overnight session, when the market initially auctioned back up at or near 1634, 1635, the order flow events detected by our algorithmic event monitor determined that buy programs were waning. This set up an opportunity to be a seller at the overnight high. As the buy programs waned, the market pulled back, our digital filters turned down, and high-frequency selling accompanied the pullback to the prior day's low. At today's open, when the S&P downticked modestly below the prior day's low, the order flow events that occurred were initiated or high-frequency buy surges. The digital filters that plot the price sequence turned up, and the S&P auctioned back up to the overnight high and went on to make a higher high, trading above the minor resistance level at 1636 and auctioned up to 1639. As price traded to 1639, the order flow events indicated that the computerized programs were no longer executing to the buy side. Buy programs waning events were detected numerous times at the high. They were accompanied by high-frequency sell surges, and the S&P pulled back off the high and traded down to the lower parameter of our polynomial regression channel. The numerical numbers that you see indicated here on this chart represent the trade opportunities that we discussed today in our live broadcast. Coming into tomorrow's session, the market has found a temporary stopping point at or near the key support level at 1620. Ideally, when the market establishes a new base of support, the market trades at the low for at least 2 or 3 days. Ideally, we would like to see the market pull back and retest the low, or auction down at least to the prior low at 1630, 1628, the lower quadrille of the developing trading range. Minor resistance is now located at 1639. If the S&P trades above minor resistance, the price path will be on a trajectory to test near-term resistance up at or near 1644, 1646. That concludes our daily recap of the S&P 500 E-mini for this Wednesday, August 28th. If you would like to follow our real-time market commentary, we invite you to visit us online at www.followthebots.com. We'll look forward to seeing you some morning at the open.
For more information regarding Zayner's brokerage services or the content of this broadcast, contact Neil Rogers, nrogers@zayner.com, 312-277-0135. This is Cuerva from Follow the Bots. Happy trading.